Welcome back to Everything Money. We're so glad you joined us today. We're talking about the entertainment parks, specifically SeaWorld, who owns Busch Gardens. Is that in Florida?
Probably.
Cedar Fair, which is our dearly beloved Cedar Point.
The best amusement park in the world.
Sandusky, Ohio. And Six Flags, which have locations all over the place. Paul, when I was a child, this is probably 1986-ish, Mo, got chose to go out on stage and pet Shamu.
Did you?
As a small child.
Oh, with a mullet like that, I mean, I imagine you probably would have.
And thinking back, why that animal didn't just grab little old me and pull me right under like a sea lion? But anyway, I got to pet the animal, and they asked me. I'm still upset to this day. The trainer asked me where I was from, and I said, Clinton, Ohio, which is near Akron. So I said my state. I was my town. I was very proud, and she goes, home. She told everyone, where are you from? Home. She lied to that crowd. She wanted me to be cute and said that I said home. And she hung me out to dry, no pun intended, in front of the whale, in front of my parents. I still remember to this day. But that's not why you're here, folks. That is not why you're here. You're here because we're going to look at these companies. The news that's coming out is there's not enough workers to fill these places. They want to be open. They're closing down days. It's chaos out there. But we're going to look at the financial health of these companies, which is probably pretty crappy. Although, as Mo just pointed out, look at SeaWorld. They're almost at an all-time high in terms of stock price. So, of course, it's all making sense.
So they just went public in 13 or so?
Yeah, so let's start. Let's look at...
By the way, we used to have a SeaWorld, didn't we?
We did. We had one over in...
yeah. Have you been past that land in a while?
Yeah. That's haunting.
Yeah, there's...
Oh, some of it is? It's just like terrible. The rest of the parking lot is all...
There's a YouTube video of a drone flyover of the property. It's really weird.
We're talking about Jogga Lake here in Ohio, but let's get after Paul. The ticker symbol is SEAS. This is SeaWorld. What's the story over here?
Market cap of $4.3 billion. Guys, not shocking. They have a negative net income, so no PE, and then a profit margin that's negative. That's understandable. Look at this gross profit, though, 91.4%. That makes sense. For every ticket they sell, how much more does it cost them to actually have that ticket, that person in the park? I'm even surprised it's not higher than 91.4%. So this is a business that has a high fixed cost structure, and every single extra ticket they sell. So when we talk about labor shortage, right now they're shutting down. These parks are talking about shutting down 2 days a week because of a labor shortage. So not only do they have to pay more for labor when they are open, they're also not getting as much revenue now. So this is going to hurt them both ways and something to consider in the short run for the company. Labor shortages don't last forever, folks. We're going to have a time when something happens that gets everybody all of a sudden. The bottom line is, don't think that these things are going to last forever, because they do not last forever. We've had too much labor in 08 and 09 to labor shortages. It just happens all the way. So either way, no dividend, not surprising, obviously. Now, revenue.
How about, revenue growth over the past 5 years?
Well, it's clear, 1.31 down to 450. So that's an X. But over the last, you look at these years, it's actually down.
Really?
Well, there's a lot of hate with the SeaWorld.
There is a lot
they got the whales
and all
the
documentary that came out a couple years ago.
I know you're for torturing these animals, Paul, right?
I actually go to SeaWorld with my bow and arrow, and I actually I hand down the animals right there. I'm like, hey, can you get them to come over the? Thank you very much. And
you're a whaler.
Yeah, sometimes I shoot them in the air to see if I can go. Up and in.
Yeah, well, that's great.
Get it right in the snorkel.
That's why everyone loves you.
Snorkel. Is that what it's called? Blowhole? I don't know. Snorkel. By the way, folks, I love animals. I have 4 adorable dogs at home. They are my life. I love all animals, I think. Snorkel, I don't know what these things are. I just tell you, this is all a joke. I love all these animals.
And during our live stream last week's donations went to an animal shelter and to help animals in Florida. So it was Mo's mom, right? No? That's coming.
What live stream were you on last week?
I thought this was the one we did. I can't remember. Anyway, so when Paul's not whaling in looking at the revenue, how about how did they even make $400 million last year, Paul?
They didn't make $400 million. Oh, you mean revenue? I thought the same thing. I'm like, where did that revenue come from the first 2 months? But $10 million in profit down to a loss of 300. That's an X. They had another $200 million loss the year after. Okay, this is the last 10 years. Negative 76, 79, 42, 55, 9, 10, minus 204, 70, 70, minus 300.
They're all over the place.
Shares outstanding. Well, at least they're doing that.
What are they doing here?
85 down to 78. But you know what? Remember, this is a company selling at all-time highs during coming out of the pandemic. Is it really a good idea to be buying shares back? I have no idea.
How about current assets over liabilities? How are they doing on bank wise?
532 million versus 371. Check mark there.
Okay.
They have that. Now free cash flow.
This should get ugly.
Now, okay. We have a $84 million free cash flow minus 136. X again, which is understandable for all of these, with an average of 35. Now, for a stabilized business like this, let's strike out the last year. Let's focus on these 5 years. It's probably an average of more like
100?
Maybe not that high.
90.
Maybe it is that high. I don't know. Maybe it's 80 million.
Okay, 80 million in free cash flow.
Times 20 for our multiple, 1.6 billion.
The current market cap is 4.3 billion.
Okay. So, guys, I'm avoiding this like the plague. I mean, I don't even need to go further. I just look at it going, why would I entertain this?
The stock ticker, even in the glory years of 2018, 19, was $26.30, dropped to COVID, dropped to under 10, and now it's at $55, Paul.
You know, it's much easier when it's an obvious no. It's just an obvious no. I'm not even putting this in a discounted cash flow calculator. I mean, this is just a clear, and I mean, yeah, it's just a clear no for me. There's going to be too many stocks out there to buy. Clear no for me on SeaWorld.
Mo, were they trading SeaWorld over there?
To me, I mean, it's kind of in the middle of the sweet spot, doing sweet spot reversals and whatnot. So again, you're going to have to, if this thing, it's been making all-time highs for a very long time. So if it does make another all-time high with a green candlestick, go for it. I think you're probably going to be better off shorting this thing when the trend turns down on you. But this is another one, just like Paul said. I think there's better options out there.
I don't think there's better options out there. I know there are better options out there. Like, this is just
well put.
This is just the plate. I mean, this is literally I'm like, why am I even looking at this stock anymore?
Well,
I
let's
understand
move
why
on.
we're doing it, but I would just, if I'm you out there and I see this, and by the way, you look at the 8 pillars, it's garbage, but I have CCL and it only has 1 check mark. But I'm looking at this going, okay, this sucks. I mean, I don't know. I just think this is terrible.
Why don't we move on to Cedar Point, which is in Sandusky, Ohio, widely
right.
considered one of the, if not the best roller coaster places in the world. Every time someone in the world makes a better coaster, Mo, they just spend $400 million and make a bigger, better one. So Cedar Point, we're lucky to have in our own backyard here in Ohio, and the ticker symbol is FUN, Paul. Let's look at this. 2.6
billion. Write that down. Again, net income is negative, so PE and profit margins and X. These are going to be bad pillars for the next year or so, at least. Revenue. I do like this. Look at this revenue growth, and I'm going to focus on. Look at their 137 million last year. It is an X technically, but look at the previous years. There's revenue growth here, Seth. Look at this every single year.
Nice, steady.
That's great.
Every single year. Ohio coming in strong. Sandusky, baby. Revenue growth every single year.
How about profit?
Profit growth is obviously an X, but before then, it was also an X. Okay, they had a big drop this year. Oh, right there. $148 million write-off.
What does that mean again?
So guys, remember, whenever I see a big drop-off in profit, 104, 147, 161, 196, 126.40. These 2 years had big drop-offs. I go to other income and expenses. I see 2 write-offs of some sort, or some sort of, go find out what those were. Is that a recurring thing that they had more of in the future? They did it last year. No, they had a gain last year of 39 million. So they lost 485 after having a gain. So you need to understand these things. I wonder what the real estate where Cedar Point's at is worth.
Oh,
You think?
I mean, it's on the water.
That's the only thing. Just based on it being on the water.
And how big is that land?
Then I go into how big the property is. Like, man, it's probably worth a lot of money.
They have to house a lot of their workers up there. There's so many workers. There's like worker housing.
They have
up
tons
there
of
as well.
housing
Really?
there for workers.
So a lot of people are obviously temporary workers.
It's a lot of foreign workers come here, spend the summer at Cedar Point, and then go home.
Oh, that's a great
It's
idea.
like a big program that they
Do
have.
they pay
there.
well there?
I would assume so.
I don't know.
They keep them coming back.
How much
All right,
shares outstanding?
shares outstanding.
Yeah, pillar number 5.
We have an X here, 56.01 to 56.55. And it literally is slowly increasing like every year. Every single year. It's slowly increasing. They're like, it's not by much though, folks, but it's still something. It's still 2% over 5 years. It's still something.
How about current assets over current liabilities?
By the way, if you love this software, guys, if you love this software, 80 cents a day gets you this software. You get access to Discord. You get every modification. We're doing a stock analyzer tool. We have an app coming out this year for this software. This is only for our Patreon members.
Yep,
Patreon.com/everythingmoney.
You can get this software right now by clicking the link below, and we are giving away a Tesla, Paul, in a little over 5,000 subscribers. When we hit 50,000, we're giving away a Tesla. It should be astounding.
And then at 100,000 subscribers,
another one, 2 Teslas this year. Keep going, Paul.
479 versus 333. Massive check mark there.
Nice.
Cash flow. Let's see how. Okay, so guys, look.
I assume you're throwing out last year.
Yeah, I'm gonna throw out last year. So that's an X there. But let's look at the previous 5 years. 140 times 20 equals 2.8 billion.
The market cap is 2.6 billion.
Okay.
Oh, okay.
So 20 times free cash flow. I think that's a little rich for a company that grows this slowly. Would I be putting this on my radar? Maybe so. They probably have a lot of debt. Go understand their debt. But this is within the realm of possibility. I go, I'm not a no on Cedar Fair. Their debt probably is a little more than I want it to be. I think they had $3 billion in debt on $1.4 billion in revenue. Seems like a lot for an operating business like that, but we'll see.
Mo, were people trading this over there?
So the first thing I want to point out, we do have, it's a 50% stock. So you have your high, you have your low, and here's that overhang area. But as you can tell, it's been pushing. So it's getting up there to its previous high of back in February of 2019. So this high is 52.50. I wrote that down because the current stock price is 45.65. So let me zoom in here just a little bit.
So Mo, this stock did trade at $70 in 2017.
Okay.
So it might have some room to run.
If it can break that area that I just said back here in February, it has some room to run. And right now, it's moving towards the sweet spot. That red line is about to cross over yellow, so it's getting there. Keep an eye on this one. Maybe throw it on your watch list. When that red line comes into the sweet spot and you start getting green candlesticks moving up, this is definitely something you can do. So this compared to SeaWorld that we just did, put this on your watch list for sure.
How about Six Flags, Paul?
Well, one thing I want to show.
Go ahead.
One check mark on all these. Remember, we did some check marks based on. So right now the market cap is 2.6 billion. In their best year, how much money do they make? In their best year, they made 200 million. That's a 13 PE in their best year. Okay, so it's not even like it seems like a good deal for their best year. The question is, are they going to have their best year again and keep growing from there? Just doesn't seem like a value play, but it seems like something that you bought at a reasonable price. It's a good brand. It's very well known. It's for the last 30 years. It's been known as like the best amusement park in the world. Yeah. It's only open, 5-6 months out of the year, and it still does very, very well. So something to consider.
It looks like it still competes with all of the Florida amusement parks and those that.
I mean, literally, I'll hear people say, "Oh, I've been to Ohio before. I've been to Six Flags.
Yeah.
I mean, I've been to Cedar Point." I'm like, "Oh, well, yeah."
Yeah, Paul. So Six Flags Entertainment Corporation, they own 27 parks across the U.S., Mexico, and Canada. And so, you got the stock pulled up there on the Everything Money website.
Yeah, and just like everything, guys, the numbers are going to be terrible. I mean, I even want to skip ahead to the 8 pillars and just show this. Again, only thing going down is shares outstanding. Now, price to free cash flow, I do like the fact it's still 22, even though they probably lost a lot of money last year. So let's go focus on their free cash flow statement, on this cash flow statement, because I want to understand, oh man, look at this free cash flow. I mean, look at this, 317, 56, 253, 241, negative 280. Oh man, so their average is, what, 300, call it? Times 20 equals 6 billion. What's their current market cap?
3.4 billion, basically.
All right. I mean, if we, are they so where do they, so right now, this doesn't seem, 15 times free cash flow, essentially. 4, whatever it is, it's a lower multiple. Can you get lower? I'm sure you can. But I'm looking at this thinking, okay, are they back to normal now? I don't know if they are, but they're probably pretty close to it.
The stock ticker price in 2018 was $70. It's now $46. Mo, it might have some room to grow.
Yeah.
But the question is, are they back to normal revenue?
Yeah, that's
the question, because then you have to start looking at those multiples based on the new cash flow. I don't think they're back to 100%.
I would have to say no.
Right.
Just based on every other amusement park in the country right now.
But they have the same view, like they have the same revenue growth that Cedar Point has. I mean, look at this, consistent every year, and I have a hard time believing every year they're adding more and more amusement parks. You know what I mean?
Yes.
So
especially now.
Why is SeaWorld? Is the SeaWorld struggling mainly because of the
animals, probably? Right?
I mean, you have to think SeaWorld is. I mean, there's a lot of. They've been hit by the animal rights people for sure. And I know, of course, they closed the location in Cleveland. Granted, it was a long time ago, but you started to see that phasing out of captivity of animals and this and that. So it has to be hurting them.
I think even a child can see that orca, that dorsal fin kind of flopped over like all sad. It's like, what's wrong with these animals?
By the way, Free Willy was a great movie.
Oh yeah,
Great movie.
It was a great.
Didn't they make 3 of them though?
Yeah, 3.
Well,
Number 1 was the best. For sure.
They beat it to a dead, beating a dead whale or horse, whatever. Mo, what are people doing over there with?
So
with
I hope
flag?
PETA comes and starts attacking us in front of the
Oh,
building.
you're wailing. We're beating the animal. Go ahead.
So this actually looks a lot like what's the last one we just did? Cedar Fair.
Yeah.
But except this one is actually in the sweet spot right now. Let me use yellow. In the sweet spot right now. So if you get a nice engulfing candlestick tomorrow or Monday, this is something that you can go after. This is looking good. So we progressively got better as we were moving forward with these.
I do laugh Mo sometimes is like in the show that is a comedy show. It's like sometimes like, wait, what stock are we even doing? We're talking about whaling and animals.
Well, I mean, we see, we do all these reaction videos. Everybody's so structured and and we're just like, let's just have a good time.
So when you're not whaling, Paul, what are your final thoughts on these entertainment corporations?
The only one that I even want to entertain is honestly
Cedar
Six
Point,
Flags.
Cedar Fair, isn't it?
No, Six Flags.
We
just did.
Oh, really?
Yeah, I look at it going, they're multiple free cash. They had stronger free cash flow than Cedar Fair. Better free cash flow based on the revenue than Cedar Fair had. So I want to focus on, I think Six Flags is the probably better well-known brand anyhow. Yeah. Let's look at their debt. Look at this total debt of the company.
Make sure you tickle the likes.
It's about the same as it's too. Listen, these companies have so much debt, but they probably have a lot of real estate too.
They have a lot of real estate, and think about the production of all of those roller coasters, and I mean everything is so tangible in there.
Well, that's part of the due diligence you look at when you sit there and read the 10K. You sit there and say, how do they finance these things?
The debt might make sense at that they're taking.
Yeah.
You know what I'm saying?
So I mean, their debt seems high, but if it's properly collateralized by good real estate, then okay. I mean, if in a worst case scenario. I mean, when you have land in California that's just skyrocketing in value,
and land here, exactly
on the water, who knows?
That's our take on Six Flags, SeaWorld, Cedar Fair. Do your own due diligence, of course, but I like Paul's opinion. That's why we always get it. So make sure you tickle a thumbs up. Check out the Patreon below if you like this style of investing and you want to join our team. You can talk to like-minded people on a daily basis. Paul, Mo, I was in the Bid and Ass Nation last night.
Oh yeah.
And when I mentioned some things. People say, who stole? They're very surprised to see me in there because I'm.
Guys, Seth is getting more involved. Him and Gio are both getting a lot more involved. So they're going to be in there a lot more.
All right, that's our take, guys. See you around. Thanks so much.